Hey guys, what is up? It's Dusty here and welcome back to another crypto video. And we've seen a lot of fear in the crypto markets over the last couple of weeks. Is it justifiable? Is it stupid? Well, in this video, I'm gonna give you guys some crucial information. I think if you're a crypto holder, you definitely need to hear about this because we're gonna talk about the S&P, Bitcoin's current price action, Ethereum's current price action, XRP's current price action, but we're starting it off with some very important info about what everybody should really just know as a baseline. Alright guys, now before we move on, make sure you press that like button. I'm really trying to hit 500 likes on this video, and I think it's surely possible if you guys all help out. And that has to do with the, condition of the market that we are currently in. We've seen a couple of conflicting messages over the last couple of days. JP Morgan is showing very bullish signs, Goldman Sachs is being very bullish on the crypto market, yet the crypto prices only keep going down. Now obviously on the other end, we have FTX who's been shouting out a lot of fear that exchanges could be in a ton of trouble over the next couple of weeks. For that reason, I've also decided to take the majority of my money off of exchanges. But there's one underlying rule that I think a lot of people are forgetting. If you think this is the end of crypto, I think you're wrong. And generally speaking, when I check through my comment section, I see a lot of people saying, this is the end for crypto, I'm completely done with it, it's over now, the charade is over, the party has faded. And that's honestly very far away from my personal truth. And even though all these videos are just my own personal opinion, I think there's some logic that can also be deduced from the stock market. But let's quickly read what I wrote. I heavily DCA into coins with proper utility/longevity. To give an example, an XRP, an XLM, a VeChain, just to name a few. But there's also obviously a Bitcoin, which I always keep buying. And I think to explain this philosophy, we can easily take a look at the stock market, where there have been multiple extended periods of crazy downtime for the S&P. You can see here over in the 2000s, we actually went down for almost 3 entire years. I mean, let's 2.5 years or so of just downwards momentum. And over in 2007, or I guess you should say 2008, the prices also just kept going down for 511 days. And it's possible to look at that price action and just decide, you see, things are really at a bad spot because it can go down for 900 days, 500 days. That's so negative. And probably at those times when it was happening, people after, let's say, 150 days gave up and said, oh, it's over. Which obviously brings us back to this famous market cycle chart where at the top, euphoria. We can compare that to these tops from, I guess, August of 2000 and December of 2007. And you can just see people's faith just leaving over time, where eventually there's panic. Everyone is selling. I need to get out because it's never going up again. And anger. Who shorted the market? Why did the government allow this to happen? Well, then depression. Retirement money is lost, and we can see that, of course, also with the Luna situation. But then honestly, after a little bit of time, the prices just recovered pretty significantly. And that happens every single time. Looking at the chart, there's actually also one very interesting phenomenon, which is the golden cross. If you guys do not know, whenever the 50 moving average goes over the 200 moving average or vice versa, you have a golden cross or death cross. A golden cross being when the short-term average prices, meaning the 50 moving average, the 50 daily moving average or weekly moving average, moves over the 200-day moving average, that's a golden cross, and vice versa will be if the longer-term prices are actually doing better than the short-term prices, would mean a death cross. If we just take a look at that over on the S&P, this is on a weekly scale, with the thick line being the 200 moving average, the blue line being the 50 moving average, it's fun to see that if we indeed actually traded this every single time, how good the results would have been. Because what it was basically saying is sell exactly at this point, buy exactly at this point right here, sell exactly at this point right here, buy exactly at this point right here. And then you would have bought, again, the stock market here, the S&P would have bought it $1,180 and you would have started to sell it, well, not yet. And again, fun fact, if you just bought anywhere after the crisis from 2007, 2008, you'd still be up roughly 200-300% or so in this little time period of 4,000, maybe 5,000 days. But then to put it into perspective, the stock market has been going down roughly about 25% for already about 190 days as well. Now, the point I'm trying to make is that there's a lot of coins like my Bitcoin, like my XRP, like my XLM, that I honestly believe have easy 50x potential. What I mean with that is if I buy them right now and I just hold on to them for, I guess, long enough, they're going to return me 50 times the money that I put in. Is this a guarantee for you? Absolutely not. And will it most likely happen quicker? The lower that the crypto is on this ranking, sure. But the higher that it is upon this ranking right now, the more certainty I feel that they are going to last for a lifetime, or at least the next decade or two. Again, there's a couple of caveats to every single crypto that's out here. For example, for Bitcoin, you could say, well, they might eventually come in with some heavy regulations. With Ethereum, you might say, well, and with regulations, by the way, regarding Bitcoin, I mostly meant regarding the proof of work concept. With Ethereum, it might be that the proof of stake actually did not work out, or that people do tend to find the fees too expensive, and so one of these other networks takes over. With BNB, it could be that people find it too centralized and they don't like the connection it has to Binance, even though they are rebranding from that. And with XRP, even though I personally think it's a pro, you might have people who said, no, it's a banker's coin, it is bad. Now, again, a lot of these negative points are also the positive points for the crypto, but all I meant to say is that they all have their own appeal as to what makes them so amazing, and they all have their own little pitfall or downfall. And so it's up to you to find the right ones that you think are worth holding, but I honestly suggest to go for a little bit of a bag, meaning 10, 20 coins or so, because it's really hard to say which ones will last forever and which ones will most likely just last for 7 years, 6 years, 3 years, 4 years. Because if we look back at 2017, look back at the market cap that we had at that point, the top 10 or so, a lot of coins that people thought would last forever, like a Litecoin, are very much gone. An EOS that was really popular most of the time, I think it topped at like position 6 or maybe even 4. It's not even to be seen anymore. It's actually at the 48th position. I remember putting 0.4 Bitcoin at EOS into EOS a couple years ago. I don't remember exactly when, but when I look at my portfolio now, I think this is worth absolutely nothing. And if I'm being honest, I'm not sure if a coin like EOS is ever going to get back into that top 10 position. And so it's a lot of due diligence, but I personally still believe in a Bitcoin, in an Ethereum, in a BNB, even though they have their downsides, in an XRP, in a Cardano, in a Solana, in a Polygon, in a Chainlink, in a Stellar, just to name a few. But there's a lot of these tokens which have their own appeal, and they might even perform better. And I actually hold the majority of the coins you're seeing right here. But it's just to give an example of what tokens I just keep buying the dip of. Then again, if I'm being honest with you, the tokens that I'm buying the dip of mostly right now are Bitcoin, Ethereum, XRP, and Cardano. Those are the tokens I'm buying the most right now. And BNB is a little crazy story for me. But whenever I get some shit coins that I sell from a MetaMask, for example, I usually transfer that over to BNB. But hopefully you guys get the point that I'm trying to make with that. Having said that, to give some perspective, Bitcoin right now just bounced off of the 2017-18 top price level. As I stated before, there's a lot of signs which showcase that Bitcoin's price right now is at a critical bottom. And one of the things which we showcased, and I'm not sure exactly why it was deleted from my chart right here, is the RSI, which every single time it goes below 30 is officially in oversold conditions. And if we look back at the past where the RSI dipped down, it's actually really interesting to see that at these price points, or at these points for the RSI, indeed the Bitcoin price did actually bottom out. To back that up with another indicator, we also have a pi cycle bottom. Not sure if you guys know this indicator, but what it basically points out is every single time they predict a bottom is in. They did it back in January of 2015, and if we scroll through, you can see right here, there, every single time it crosses over. It's basically like the moving average example I gave you earlier. They showcased this somewhere in 2019, and if you take a look, right now we are very, very close to this indicator flipping again, which could signal another potential bottom. There's only actually one indicator, or I guess one chart, that does point out to the exact opposite of us being in a really negative spot right now, and that is if we take a look at the trend line from all the way back in 2015 up till now. Again, looking at the pi cycle bottom and comparing that to what we saw with the S&P, both on a logarithmic scale, then things are looking pretty similar and things are looking pretty good. Again, on a logarithmic scale, but if we just take a look at the trend line, however, this month of June, so last month, is the first time that we actually did break through though. And that is at that point, we're actually making lower lows than I guess we've done in 7 years or so, which from a certain perspective is bullish because the S&P is having a similar sort of action where right now we've been going down for almost 200 days. And so it's actually kind of good that Bitcoin is trying to basically retest on the tops that we made all the way back in 2017, just to set itself up for success in the future further on. And I guess as long as we do not actually dip below significantly, where our first initial support would then most likely be at roughly around 16.6, which is the top that we hit in January of 2018, a little bit after our top, the first next higher low or lower high. You guys probably understand why it's both, right? That is good to see that, oh, we finally broke through. We're taking out a lot of this doubt if we do actually bounce from here, but there's also an additional amount of fear because we've broken the structure which has lasted for 7 years. On the short term, here's a couple of things I said on my 5-minute crypto channel as well. If we're taking a look at the Bitcoin dominance, we've seen a bounce from this 47%-ish zone every single time, bringing it right back to 40. It's been interesting to watch this, but in the near past, what it often used to be like was that whenever Bitcoin hits a crazy high number of dominance, that altcoins used to pop off. And here you can see an altcoin chart for yourself. Now, one of the things that can be observed is that this is not the exact same anymore. If we look back in August of 2021, it still held up because you can see here Bitcoin dominance over on the top chart at let's say 47% again. It dipped down, and at that point altcoins were popping off. You can see here Bitcoin dipped back in dominance at about 40% over on the top yet again, and altcoins start to dump a little bit over that time period as I guess that bottomed out. Bitcoin came right back to the top in dominance, and then altcoins started to pop off as Bitcoin dominance fell off again, and vice versa. It is therefore interesting to see what the dominance is going to do in the short term for Bitcoin. But what is more interesting is actual price action, right? And what trades can we pull here? What can we do? Now, it will be logical if Bitcoin actually does not dip too far below the area which we are in right now as a final bottom, basically considering 18,000 or so the major bottom for Bitcoin. Again, if that does not hold, we're taking it all the way down to 16.3 very easily. But let's see the good right now. The reason I'm saying this is because right now we are at a trend line bottom, and again, a logical bottom for what we saw in 2017-18 as well. And so it would not be too crazy to just get a sort of relief rally going all the way towards, for example, 31,000 to retest the stop of the structure, but also one of the major support/resistances that we've seen over the last, I guess, 1.5 years. On a more short term, we're seeing a descending, broadening wedge. And how this often plays out, right? This happens in bear markets, is that the moment that we get ourselves the confirmation, which is this little green line that I've drawn for you guys right here, a confirmation of a breakout, like you see in this example right there. The moment that this happens, the moment that we break out, we go back to the initial price basically from where we went into the structure. So that would, for example, be this little top right here at about 27.5 to 27.7 thousand. It would be preferable as a confirmation if we actually do beat this little local high though. And the reason I'm saying that is because we've consistently been reaching lower highs over the last, I guess, week here where the structure has been forming. And so if we get a confirmation above this broadening wedge, but we did not actually beat in that short term this local high, then the pattern is not as strong, I personally believe, because we're actually still in a, I guess, broadening pattern towards the downside, but then just a little bit more broad, right? We have not changed the structure up from being lower highs to our first initial higher high. Then again, guys, if we do break out, I am going to open up a long position that's most likely going to last me all the way towards 21.6 or so thousand dollars. And on the short term, so zooming in a little bit, I actually still consider the exact same thing. What we have open for ourselves right here is actually a Fibonacci from swing low to swing high over on the last couple of days. One thing that's becoming apparent is how dearly people hold these Fibonacci levels, because one thing that's quite apparent is, again, if you look at the 0.236, for example, a perfect bottom was formed at that level exactly. Then pretty recently after, you can see the top at the 0.786. Not perfect, but close enough. We can definitely see that people use that level as a potential short-term top. And it also coincides with a price level we've seen here in the midst, and also a level that we saw right there. So what are we expecting now? Well, personally, I was expecting a bounce off of the 0.382 or a potential retest on the 0.236 where we'd actually break down to retest all the way back at 17.6K. But as it currently stands, it looks as if it found its bottom at the 0.236, then actually found another bottom here at a major support line that dates back a very long while, but also is our local top right here back in June 19th. And right now it's starting to pump. Taking a look at this though, obviously the level we want to take out just from the get-go here is 19.7 thousand. We actually would prefer to close above there, and then on the 4-hour chart, a close above, let's say, $20,000 or above this local high right here would also break the structure on the long term, which again would leave me pretty bullish. For Ethereum, there's not really too much to say except for the fact that it's bouncing between two very important tops from 2017-18. And again, this is actually what I predicted for you guys with Bitcoin as well, where again, if we break through this initial top from the 2017-18 cycle, that we are going to go to the, I guess, first next level. For Ethereum, that would have been right here at around $1,200 since we broke through. It's the next one in line, which is right here at about $940 or so. And that's exactly where we're bouncing in between right now, between this top right here at around $900 and the top right here at roughly, let's say, $1,300-$1,400. Just for fun, I quickly opened the stock market again as I just noticed, hey, it's time. Around 50 minutes ago, the stock market opened, and since that one is pumping, since the stock market is pumping, obviously Bitcoin is pumping too. This happens almost every single time. Whenever the stock market opens in a gray green and starts to pump a little bit, Bitcoin follows the exact same fate. And regarding XRP, I've been squiggling around for a little bit, trying to take a look at what potential trade we could put up right here. And to be honest, the XP chart does look pretty good. We have stepped away from our local bottom here, our local supply zone, demand zone for XRP, which lied roughly at about 30 cents. Right now, most likely scenario is again to see the upside and potentially bounce off of 34 cents to come right back down and continue on with the pattern. Or again, have the breakout like we were kind of structuring right there. And then most likely come all the way back to the prices which we saw right here at the beginning of June, which is roughly at around 41 cents. And so on the short term, as we had a lot of price action within that area, and so it would be a logical decision for the price to retest at that point. That is again starting at around 38 cents because we of course want to take out this local high right here at around 37.5 cents. Also want to remind you guys of two things. The adjusted SOPR for Bitcoin I showcased to you guys every single week or almost every single day right now. It's showcasing still that we're making lower highs and lower lows, everything. What that showcases is that more people are realizing their loss right now, which again is another bottom signal. Why? Because every single time people realize their loss, there's less selling pressure for the near future. So you're basically getting the negativity out of the way sooner rather than later. Over on this chart right here, we're showing the exchange reserves, and the lower that this gets, again, the more bullish that we get, because more money on exchanges means more selling pressure. And right now, this also has been going on a descending line, which again is a very nice indicator. And last but not least, we're seeing the supply last active for a year plus is still at a ridiculously high number, and that basically showcases a lot of people right now have gone from being able to just move their money around to staying stagnant with it. And so together with the two statistics that I just showed you guys, this means people are waiting for a sudden move in the crypto price, in the Bitcoin price specifically, before they're going to take action. And I honestly expect that they're most likely going to start taking action the moment that things start to flip bullish again and go crazy. But that basically means a lot of people right now, if we go on the fact that a lot of people are exiting right now, selling out, the exchange reserves are lowering, but the majority of people are not really moving their money right now because they're not willing to sell. Again, this number would have been a lot higher if people were debating about selling, but they're really not. The price action, a lot of it is just pure manipulation, but I think there's a good chance we're going to find a bottom somewhere. And even if we don't, right, even if we don't find a bottom within the next couple of days here, even if we do step another layer lower and go towards 60.5,000, I honestly think the best strategy to go for is to DCA, just buy your way down, because literally, how low can we go? Maybe in the worst case scenario, worst case in the world, we go to $3,000. If you layered your buys correctly, it's not a single problem in the world. Yes, you might have bought a couple of times too high. Yes, sure. I closed the S&P chart already. I mean, it's zoomed in. But even for the S&P, you might have bought a couple of times too high. Yet if you look back at the 2007 and 2008 crisis, I don't have it in front of me right now, but you guys get the idea. If you look back at that point, any price that you would have bought at would right now still be double or triple. And so then it really doesn't matter if you bought it at $1,000 or $300. Sure, it would have been more profit the lower you bought. Would you rather have bought it at $1,000 or not at all? All right, guys, that was it for today's story. Hopefully you all enjoyed it. If you did, make sure you press that like button. I'll see you guys again in another crypto video.